All right. Good afternoon, everybody. I'm going to just set up the screen. We should be recording, so everybody just bear with me for one moment. All right, here we go. We're going to go through a PowerPoint real quickly, and then I want to show a couple of setups here that are pretty effective for some short-term trading. Just set this up. Okay. All right. Well, good afternoon, everyone. Today, of course, is Thursday, April 12th, 2018. So once again, I do want to welcome each and every one of you to the webinar today. And as always, thank you for attending. So it's been a pretty interesting few days here. We've seen Mark Zuckerberg get grilled by Congress about his platform, Facebook, that is, of course. And that's been an interesting few days of testimony. We also are very slow. We're kicking off earnings season. So earnings right now have been obviously very, very slow. Tomorrow we start to hear from a couple of big banks, and they should be the first wave of companies reporting. And then next week we start getting into the usual suspects. I believe Netflix reports next week, and then of course all the other tech guys will follow. So again, I enjoy the earnings seasons. I'm hoping that you do too. All right, we're going to start out with the monthly charts. And again, I'm going to go through this rather quickly. And again, the monthly upper band is really what we've been focusing on, okay? And again, here's the levels we're looking at, and I'm going to have that for all the major markets we follow. S&P 500 upper band is 2574. Now, you can see yesterday we closed at 2642. So we're still about 65 points above the upper band. We look at the Dow, upper band is 22,658. We closed at roughly 24,190. So again, well above the upper band. The comp, NASDAQ Composite, 6590. Yesterday we closed at 7069. So again, still about 400, almost 500 points above the upper band. Now we get to gold. Now gold is getting interesting because it really appears as if it's approaching that upper channel level. Okay, now over here, just real quick, we don't see a lot of volume here. Okay, I'd prefer to see volume start to really pick up if this is going to be a valid breakout. All right, and usually when you have these breakouts from resistance areas like that, you really would like it accompanied by higher volume. So right now, to me, this potential breakout could be suspicious. And then the final deal we look at, of course, is Apple. Okay, upper band is 159.78. Yesterday it closed at 172.44. So still about $12, $13 above the upper band. And again, the significance of all of this is very simple, okay? I mean, I don't feel that we're going to go into any sort of significant market correction until, or I should say, unless we close below the upper band on the monthly charts. Okay, now we're going to hone, I'm sorry. Here was oil. I neglected to mention that. This is actually the spot price. Again, what we see here is something very interesting, and that is the fact that it came back, tested the mid-band, and now it's above it. Mid-band is, this is incorrect up it. Mid-band is 56, 52. 132.61 is the upper band. So at this point, the mid-band should really offer support, with really a retest of that upper band. Now, again, when I say a retest, the retest could come below it. I mean, to me, the logical point that this should test is that 107 area. that last pivot high. All right, now we hone down to the intraday charts. And again, today I'm only showing the 60-minute charts. Okay. But anyway, here's the significance right now. You can see where the S&P had crossed into a downtrend. Did it back towards the end of March. All of these are the major levels. The blues over here are the confirming lines. Okay, so typically I'll draw those in blue so we know the distinction. But today I actually have them just denoted with the blue star. Okay, now we are at this point retesting 2656. Okay, we came down, held support. And you know, here's something very interesting that I want to point out on this chart. Here are the major significant pivot highs and pivot lows, okay? Now, what's interesting is simply this, and I've shown this on other webinars, but I'm going to repeat it here. That high came to 2739.14. It overshot the 2734.40 level by 474, okay? So if I take that 474 and add it to this support line, you get, I'm sorry, I subtracted from that support line, I get 2553.84. So this is really interesting because what I'm saying is here, the difference is almost equal to that distance, that difference down here, compared to the resistance level that it was trying to find support on. So, you know, it took it out by 474 at the high, and then down here at the bottom, it exceeded it by 474.5, and virtually to the penny. I mean, this was actually a 4-cent difference. So it's just, you know, again, it's remarkable to me at times how these numbers can work, and you know, and how the market just pivots on them. All right. All right, then here's the Qs. Again, you can see the Qs had turned into a downtrend, crossed down on the 60. Same thing, right around the end of March. Major levels, 162.50. And then you've got the supporting, the confirming lines underneath that. Here's the diamonds. Again, diamonds, this is kind of interesting because the diamonds had never really crossed into an uptrend. It was really continued to be in a downtrend. But again, you have your significant price levels. At this point, 240.63 should be support. And then we look at the XLE. XLE had crossed into an uptrend back on the 23rd, okay, of March. And again, what's been kind of interesting about the XLE, and we'll look at it on a daily chart, is simply this. It basically traded between 65.63 and 68.73. Did this for really an extensive period of time. And then finally, we had the breakout above 68.75. And now you can see here in the past few days, it took out the upper band and has shown an incredible strength. I do believe 71.88 ultimately gets hit. Then we look at Apple. 168.75, major line, 175. We take out 175. I do believe Apple tests 178. All right, so that's what I wanted to cover today in terms of the PowerPoint. Now, let me just Oh, okay. Well, I didn't. Okay. Let's try this. Okay, there we go. There we go. All right. Now, a couple of things I want to go over. And something relatively new. Before I do that, I'm going to try to drag the handouts over. Okay. And again, this gives you all the price levels, and that's really what I wanted to cover today. But today I want to cover something different because, again, remember, we're just getting into the start of earnings season. I really don't see any. Well, we'll take a quick look to see if anything was interesting today. But I think really we start in earnest tomorrow with a couple of the major banks, as I mentioned. We've got we got Wells Fargo, we got PNC, JPM, and Citibank all reporting tomorrow. So if we look, BBBY wow. So they're down almost 20% today. So again, huge climax here. You can see the volume just exploding to the downside. Interesting. They had a beat compared to the consensus, and they dropped, which tells me they probably had a situation where their guidance going forward was revised, or they might have a bearish outlook going forward. But again, if we look at this chart, and again, I don't particularly advocate. I really wish I could come up with a methodology that was somewhat accurate in terms of trading these type deals before earnings. Okay, but to me, if you were going to do that, the only thing that makes sense is to trade in direction of the money flow and the trend. Obviously, you don't see the mid band here, but if you look over here, you can see the 200 EMA is below the mid band. Right, so we know it's in a downtrend. We have bearish money flow. So to me, the only logical trade to consider on this going into earnings would have been a short. Okay, however, the point here is this: as we know, that is not 100% infallible. It just doesn't work consistently enough, I feel, in order to warrant trading pre-earnings. I think you're better off trading post-earnings, and as we've talked about on multiple occasions. Hey, can everybody see the screen, by the way? I just want to make sure. I didn't do a test before. Okay, I didn't do a test before, but I did want to double check. But anyway, huge sell-off today on Bed Bath & Beyond. Now, today, before the open, we had BlackRock, all right, which to me isn't a company that would typically have a big move. And okay, it's a $500 some odd stock. It's up 2.5%. Nothing to really write home about, unless you're shorting it. And we've got Delta. Let's see what Delta did. All right, not much there either. Okay, so the intriguing one is Bed Bath & Beyond, because it's had that huge gap. All right, so now we can see here, check this out. We've had the huge gap. It's way underneath the lower band. I'm going to assume it's underneath the lower band here as well. Now, there it is. Now, to me, to play the snapback is an intriguing idea here because it's been oversold so much. And the question now is, okay, when would you put this on? Okay, so at the very least, what I want to see here is this. All right, couple of conditions. Number one, in order to go long, I really don't want to see a bar closing under the low of that first bar. All right, that would be kind of my first condition. And the second condition would be I'd want to at least see the MACD down here turn positive on the 10. Okay, and that's just happened. So now the question here, or I should say the issue, is this. And this is like trading off the resistance levels in my mind. And here's what I mean. If you went long here, you can see it's right now at 1739. Right? The pivot low is 1726. Right? So the point here is simply this, that if you went in there right now and bought calls, okay, your risk is down to 1726. So what I would do is this, if I bought a couple of call options on this deal, all right, and I saw a 10-minute bar close under 1726, I'd close it. And I'd get out of the deal. Okay. Now, there's nothing to say that it's not going to collapse even further and have another big move, but it's highly improbable at this point. I mean, you know, to me, it looks like what they're doing is getting the flush out. And the reason I say that is because of the volume level on the daily chart. And if we look here, let's go back to the daily. Here's your daily. Now, let me put this on separate, the volume, so we can see. All right, now look at that volume bar. $23.8 million shares have traded hands already today. All right, so the point here is this, that, you know, if you compare that to any other day, I mean, maybe the largest day is back here. Okay, and maybe, by the way, that may have been the last earnings report or release. But the point here is this. This is the largest volume spike we've seen on this chart in 6 months. This is a 6-month chart. So it's getting into that selling climax area where people are getting flushed out. So again, what makes this trade setup interesting to me is that there's a very, very low risk in terms of going long right now. Now, the question is this. I mean, you know, are you willing to take, you know, to go against the trend and make that trade? I mean, to me, what really makes this rather compelling is you only have like a, you know, less than a 10-cent risk. And quite honestly, if this thing starts to bounce, well, where's our target? Well, to me, the first target is going to be back to the high of that gap bar. So if I put this on, let's see here, that high is 1820. Okay, so we have about $1 objective on a 1737 stock. All right, that's objective one. Objective two would be back to, yeah, thank you, Andrew. He says lower band. That's exactly what I was going to say. Your next objective is back to the lower band, which is 1843. So that's about $1 move on a. Now, again, what's nice about this trade is if you're using options, right, you don't need to buy, you know, 5 months at a time. You know, you could trade this with a weekly. Today's a Thursday. If they do have weeklies, I don't even know if they do. But I mean, you could trade this using tomorrow's options that expire because you're expecting to bounce today. You're shooting for the probability of a snapback today or tomorrow. And again, after it takes out, or if it can take out the 1843, then the next target up is going to be about half the gap fill. So if we look at that, hope this all makes sense. The low there is 21.24. I'm sorry, 21.29. The high of the gap bar was what, 18 something we said, 18.20. Divide that by 2, we get 19.75. So that becomes a little intriguing because we're looking for maybe, if this thing does have the snapback and follows, the objectives, we got a potential 2-point move. Now, if we go over here, let's take a look to see. CBSH. I'm going to take a look at that deal. All right, now. Let's see. Okay, so this does have weeklies. So let's take a look. I wish there were 17.5. But right now we don't see it. But, see, what I would prefer is one closer to the money. The stock is trading right now at 17.38. To me, it's still a little bit far away from 18. That's like 60 cents away from 18. And the other way to look at this is, well, we were looking for first target to roughly 18.20, which, quite frankly, with time erosion and all of that, considering this is a weekly call option, if it went there, it would probably only be worth about a quarter. So to me, there's not enough room there. But if there were 17.50, that would be intriguing because maybe you could buy the 17.50 for 25 cents with a potential gain or value if it hits the first objective of about 75. So again, I don't know. I mean, this is looking on Yahoo. I'm not logged into my trading platform to see if there's other strikes, and there probably are. It's just Yahoo's not showing it. All right, so he said, okay, thanks, Andrew. Andrew, what is the 17.5 going for right now? This will be intriguing to see. Because now remember, that call is only 12 cents out of the money. All right, he's showing a 31.37 bid-ask spread with 1,000 volume. All right. What's the open interest, by the way, on that? Open interest is probably about 1,000. He doesn't see any. Okay, yeah, because you know what? That's probably all put on today. But anyway, the point here is this. If, say you paid 35 cents for these, okay, we know objective one's back to 18.20, all right? So 18.20, and again, I'm not factoring any time value, is roughly 70 cents. So if it hits first objective, you've doubled your money. I mean, if this thing went to the half a gap fill, it would be worth about $2. So that'd be like a 35-cent purchase, watching that go to $2, which is a pretty palatable trade. Okay. But again, what I like about this and what makes this interesting is that, A, if this thing closed under 17.25, you'd be out. So your risk is not all that high here. All right. And again, we're looking for a couple of conditions that warrant taking this kind of trade. I mean, condition A is you really don't want to see a price bar close under the low of that first gap bar on the 30-minute chart. And then condition B is we want to see at least positive MACD come into the deal on the 10, and that's just what happened right now. So again, we'll have to monitor and see if this thing does what we anticipate it could do. All right, let me just move on to something else, because this is something we've been trying to. I've been trying to come up with a way to actually scan for this stuff. And as you know, I mean, or you may not know, I mean, I use stock charts just to show you. I mean, all of these here, these are all scans. Right? And I think I'm allowed to have on this 200 scans. You can see here I have 196. So I have 196 different things that I could potentially look for. Now remember, some of them are based on weekly scans using weekly price bars. Some are based on daily. Okay. So what I've been always trying to, like, for example, here's one now. This basically is trying to find a bottom. So if I go back 56 days, just to give you an idea. Okay, it came up with 4 deals. Let's see, PCG. So this will tell you, if I go back here, it'll tell you what day the scan is. This is January 19th. Okay, so January 19th, which is roughly in here. Okay, you can see the stock kind of drifted a little lower, and then it finally reversed. Probably still up from that day. Let's see if there's any. There was ARRS. I've never even heard of that company. Okay, here's AARS on the 19th. That's where the scan came in. Actually dropped lower to the lower band and then moved higher. So, yeah, did it work? Yeah, effectively it did work. Let me see, GNC. GNC has been a real dog. Now, here's the 19th. Geez, I don't know which day is the 19th. I don't know if it's that day. Well, I can tell you. Let me see here. Okay, so here's the 19th here. All right, but based on this chart, this thing probably came up back in this area as well. So actually, that's not bad. If you bought around the lower band, the pivot low was 313. Say you got into 350. I mean, it jumped that day. It spiked on the gap to 540. So again, you know, to me, it kind of worked. All right. Now, the reason I bring this up is because what I'm trying to do is somehow find a way to scan for the shorter term time frames, okay, and with any consistency, because we know basically the setup. And I'm going to bring up PSX charts now. This is Phillips. Now, here's something. Here's basically your setup. You can see over here on the 60, right? Phillips Petroleum, Phillips 66, had actually crossed into an uptrend. Okay, then we had two setups where after that it was oversold. Then I go to a 10-minute chart. Now I see this. Here's the 10-minute. Now you can see back here on the 5th of April, the 10 crossed into an uptrend. And then you can see how, you know, based on this arrow, this has been a nice defined uptrend. And again, we're defining that uptrend as simply the relationship of the 200 to the 253, which is the mid band. And then we're watching, you know, it's just a visual representation that you want to see. You want to see those EMAs or those averages kind of starting to spread apart and moving up and to the right. And that's exactly what's happened here on this 10-minute chart. So the 60 minutes in an uptrend, we have a pullback here on the 6th, and it got oversold late in the day, pivot low roughly 96, and I made a note up top here. I mean, effectively, that 96 weekly call went from 80 cents to probably $7. All right, so here's a nice return in 4 days. Not quite 10 times your money, but a wonderful return. Now, another thing I want to point out here is this. This sell-off on the 6th, if I go back to the 60, here's the 6th, right? But look up here. Money flow was positive. So that's also helping to confirm that this thing should start moving. And that's exactly what it did. And again, what's interesting is you note here how money flow is negative at a pivot high, negative, right? And what happened? It kept pulling back. And finally, it crossed up here right at that pivot low. Now, again, these charts are not in the PowerPoint, okay? But let me see. Was it BDA? Let's take a look at VLO. Now, VLO, basically in the same industry, okay, as PSX. But you can see where it crossed into an uptrend, okay? Back here in the, I guess, the middle of March. And then I go to a 10-minute chart. Okay, now you can see here, you can't really see it from the this particular viewpoint, but in an uptrend, okay, got oversold here on the 6th, basically the same time that PSX did. All right, so from that point, 93, roughly 94, it jumped to roughly 101. So this is about a $7 move as well. And again, oversold, uptrend on the 10, uptrend on the 60. Let me just erase this. And we also had positive money flow. Because here's your little pullback on the 6th. So again, just a very nice trade in a short period of time, just off of this setup. Let's close this down. I wanted to see. I think CLB was another one. All right, because here's CLB. Because I thought this was interesting because here's your cross. You can see how money flow was positive in here. All right, and then it took off. I don't know why it's doing that. Now, I scoped down to a 10-minute. Okay, the 10 crossed up on the 3rd. All right, now, again, here's what was interesting. On the 6th, it was completely oversold on the 10. And, I have a note up top there. The 105 call went from 350 to 11 in 2 days. You got better leverage, by the way, on the other deals. Take a look at the 60. So here's your entry on the 6th. Here's the 6th. Oversold on the 60. And then if we look at this 30-minute, okay, you can see the 30-minute just crossed into an uptrend right before the 6th. Not very vivid nor clear, but was oversold also at that low. So, again, this thing jumped about $11 in 2 days off that setup. Any questions? Close this down because I have a few other examples. But the basic point here is simply this, that to me, all right, when that money flow is positive on the higher time frame, it's really worth it's an even better setup. CRTO. I think this is a lower priced one. Yes, COP. Thank you. Yeah, because the other one we were looking at was COP. That's right. And COP performed exactly the same way. I mean, we look at this. I mean, this is just beautiful, okay? There's your cross up. Hit the upper band, came down. All right. Money flow essentially positive the whole way. All right, so, here's your first oversold condition here. That's not working right. Okay. First oversold condition after the bullish cross, okay, was right there at the beginning of April. And that just started to move. Now, if we integrate even the shorter time frame, let me erase that and put it up on a 10. Okay, here is the bullish cross on the 5th, oversold 58, roughly 58 and a half. So this moved about $5 in what? 1, 2, 3, 4, 5 days. So again, a very interesting pattern that I really like. And I think it warrants it when the money flow is positive at the bottom on the 60. Like you can clearly and vividly see where money flow had been positive here on the 60-minute chart. And, I guess what I'm saying, too, is I'm getting to the point where, like, when I look at these intraday charts, and I'm contemplating entering a position, okay? At the very least, I want to see if the 30 and 60-minute charts are in downtrends. At the very least, I want to see the 10-minute having crossed into an uptrend. Because what's going to happen is, how do I say it? You're not going to have any sort of positive price movement until you start to see the shorter time frame at least moving into a bullish formation. And I think that's why I had Snap up before, because if we look at Snap, and here's what I mean. If we look at Snap, we go to the 60 and 30. Okay. Now you can see Snap here is in a downtrend. It's in a downtrend here on the 30 as well. Okay. So we've got downtrend formation on the 60, downtrend formation on the 30. And then if I scale down to a 10-minute chart, I can see that right here, the 10-minute just crossed into an uptrend. All right. And, the stock kind of flatlined here. And what's kind of interesting about it is from there, it just kind of exploded out of that formation. There's your oversold condition. There was an oversold condition there. And I bring this up because if you look over here on the left-hand side of this chart, it really, here it is, it really didn't do anything, right? Let me just take this off so we can see it a little better. Okay. If you look over here, the stock really didn't do anything. When I say bullish-wise, it just kind of flatlined here for, 4 days. I could say really 5 days. And then once it crossed up, shorter term momentum at least was coming into the stock. So what's kind of interesting about this is it went from 1450 to a peak of 1550 in basically 3 days. And that's why I was actually looking to see, let's take a look, if I could get a price on the weekly call on Snap. Let me see here, the 13th. Well, let's see. All right, if I look here, the 14 call. All right, this was, let's see, on Tuesday. Looks like all right, that was about 50 cents. Now, again, that's relatively expensive because that was slightly in the money. About 25% of that was actual real value. 25% was time. But you can see here that it went to almost $1.60 in 2 days. If we scan out and go out one strike further out, which would be the 1450, no, wrong one. Okay, so this was like 22 cents, maybe a quarter. All right, and you can see today it had a high of $1. So this went from 22 cents to a buck in a few days. Now, that to me is pretty sexy because think about this. Yeah, virtually anyone can afford 5 calls. 5 calls is about $100, right? And this is a situation where in a couple of days you could go from basically spending $100, and in a few days it's worth $500. So that becomes very sexy to me. All right, and that's why looking at some of these lower price deals can be very fruitful, especially if they have weeklies like this. And again, if I were in that trade, by the way, and I wasn't in full disclosure, I would have been gone on the spike. I probably would have been gone here when it hit the upper band. So, quite frankly, I probably wouldn't garnered the maximum value. But if I didn't take profits at the upper band here, I would have most certainly taken them there, would have spiked above the upper band. And again, that's the value of these bands because, it's warning us. It's telling us, okay, you know what? We've got a condition that maybe warrants us to consider booking profits. Anyway, that's what I wanted to cover today. So if anybody has any questions, shoot them through. If not, then we'll probably just close down for today. All right. I don't see any questions, so I'm probably going to close down. But that the COP was an excellent example. And thank you, Andrew. I forgot about that. But it's funny because if you notice, all those oil stocks basically did the same thing. They all kind of moved together. Yeah, cool. And what I'm going to do is, by the way, I'm going to talk to John and see how accurate his is and how practical it is on Thinkorswim to do the intraday scans. I know he can do different intraday time frames. But really, all I want to do is say, okay, let's take the 60-minute and uptrend, and then let's find the deals where the 10-minute has a bullish crossover. And then we know those are the deals we want to really focus on. Or we take the 30-minute and uptrend, and then we have a 10-minute bullish cross on the 10. And then we can look at and pare it down to, just the ones that have weekly options, and then look at the very short-term swing trades on these things. Not every deal is going to work, but what's going to happen is, we're putting ourselves in a position where we know we have the, parameters or a condition that's going to work fairly efficiently Yeah, it's definitely bread and butter. I mean, I like doing this uh, because you can see momentum starts to move, and especially like for example, like on a deal like COP. Okay, all right. Clearly in an uptrend, right? I mean, my an 8-year-old kid can look at that chart and say, okay, that's in an uptrend. Okay, well, again, why do we know that? Well, we've got the 200 EMA separating from the 253. All right, they're both gently sloping to the right and up. So by definition, that's our uptrend. Now, the only other trade parameter I'd put into this is that after the 10 crosses, we buy the first oversold condition. I would double the position if the money flow is positive on that 60-minute chart. So, for example, Snap was in a downtrend, so that didn't qualify. But I wouldn't, I would use a normal unit allocation on a deal like Snap. But if you think about it, PSX, let's go back to that deal. Okay, this fit the conditions and the parameters I was just describing. Both in uptrends, oversold on the 10, all right, positive money flow on the 60. So say your normal allocation here is a 10 lot. That's $800. Well, what I would do is double it and make it a $1,600 investment. So if you had a 20 lot going, that $1,600 went to $14,000 in a couple of days. Now, of course, the temptation is as you're getting into profits, not to let it run. I mean, there's no question that becomes an emotional issue. But, to me, this is basically a 2 to 4 day swing trade. And if we look at this 10-minute chart, okay, what's confirming us to stay long? All right. And there's just some very simple things here that can help to confirm that. All right. And I'll show you what that is. Okay. A, bullish gap. We didn't have the bullish gap here on the 11th. I mean, I'd be gone after 4 days. So say you entered here, 1, 2, 3, you might get a little more follow through today, but to me, you've got to be relatively happy watching 80 cents go to $7. So I wouldn't bicker. Now, the other way to look at this is this, okay, because it has weeklies, right? We could go to Yahoo, right, and say, all right, let's see. Let's go to PSX, and I'll show you what I mean. All right. Right now, PSX is up about 6 cents, so it's 102.60. All right, now, if I go down to the puts, okay. Ideally, it would have been nice if it had a 102.50. But if we look at the 102, you probably could buy this for 45 cents. So you're 60 cents away from the strike. So say you hedged it down to 102, you're basically risking $1.20, $1.10, okay, to lock in about $6 worth of profit. Now, basically what has to happen is tomorrow, PSX has to move up greater than 45 cents for you to recover the cost of that put, okay? And again, I don't particularly like it that far away, okay? I'd rather have a 102.50 put. But if I go back to, let's go look at the daily chart, and this will help us make that decision too. All right, here's your daily chart. Now, if I put up an average true range, I put that up. Let's take a look. All right, average true range over here, if everybody can see it, is 220. So basically, I'm risking $1.10 for a maximum of 220, if you understand my logic. Okay, and again, what you've done is you've locked in a $6 profit on the call side. Okay. Now, of course, the other risk factor is it does nothing tomorrow and just kind of flatlines. So you lose the premium, the 45 cents, which would be better than, how do I say it? It would be probably better than losing the $1.10 if it dropped below 102. All right, but that's how you can kind of evaluate the risk to reward on this, and it is that fruitful to consider doing that. And that's what makes having the weeklies to me really nice, because you can consider doing a tactic like that to protect your position, because it's only another one-day trade. And as we know, a stock like this, if we get some follow through, who knows? It might jump $3 tomorrow. Anyway, that's what I wanted to cover today. Let me just do that. So if I look let's take a look at the 10. Okay. All right, there's your 10. So, right now, I really don't see anything that says to me this thing should probably reverse down. All right. In fact, in my mind, it looks like it's probably going to continue and maybe get a little push higher. And if it does, then you've kind of protected yourself, hedged yourself using that tactic. And as I said, the cost of the put side is 45 cents. So if it does go up, all you really need to do is to have it go up roughly $0.50 to cover the cost of the put. If it moved the average true range, which is 220 from where it is right now, that puts you about 104.70, maybe 105. So that's kind of, again, very interesting tactic to consider if you are using weeklies. All right. Well, listen, I think I'm going to close now. My voice is starting to go. Just scanning to see if there's any other questions. Let's see what happened on BBBB. Okay. Hasn't really done anything. Now, right now it's trading at 1732. Pivot low is 1726. And by the way, the other way to do this trade is to, just kind of follow it, watch it, see if it's breaking down. And if it's flatlining, then maybe you can get a cheaper option. Because we know using a weekly, the closer we are to Friday, the cheaper these options become. So, to me, that trade is not as sexy as the setup we were just talking about in terms of the multiple time charts being in uptrends. All right. Anyway, listen, I appreciate everybody being here. It's been a great day. Hope this has been helpful. And I will see you all again in 2 weeks. Thank you very much.